This is silver on the monthly scale priced in US dollars. And you recall the analysis that I presented concerning these two lines, one the black and the blue line that we have here. And the situation is currently still awaiting confirmation as to the bullish move that we have witnessed right from the bottom here. And you can see that the past 2 months, in fact, it turned down. The pressure of this line and the lack of support of this line is evident as it is now manifesting weakness. But it's not all that. We have worked with the assumption that that could be a 5-leg run that would lead to further run. That will collapse. This idea will collapse if it does break further in the coming week under this blue line that you see here. We'll see the details in a sec. If that happens, we're going to have to start factoring the possibility that it's going to crash through the floor. That will have pretty dramatic implications as to the future price action of silver. But as I said, we are not there yet. There is no need to read too much negativity into a situation that is still developing, that is not necessarily really negative as it stands right now. You see, the one thing that would immediately spring into being the favorite wave count, should it crash through this level and reach towards the floor, would be the following: that in fact the B ended here. Out of many options that we have, the B probably ended here, and that will be wave 1. That will be your A, that will be your B, and the 5 waves, the nice 5 waves run that we have seen here will end up being a C. That's a C trap. Yeah, that's a C trap. We should treat it as a trap once it crashes through towards the floor, because that will be, in my opinion, a pretty strong signal that it is going down. It's going to lower lows here. So I hope that the levels are clear to you. Here we're talking about 14.6, okay, 14.6, and the most critical level is right at the bottom of 13.9, okay, 13.9. I repeat, if it does crash through 14.6 and begins to give us several daily closes in this zone, I'm sorry, this is too much weakness for a bull that wants to come back. That's too much weakness, and almost certainly we will see weakness manifested in the action of the Australian dollar, US dollar. You have to keep an eye on that one. You will see weakness evidently in gold, and you will see weakness potentially also in platinum. I'm going to check platinum today. In short, the dollar index, should it take off, and that could happen in the next week or two, as we have a crisis, as you well know, we have a crisis developing in Europe that could severely impact the euro and the British pound vis-a-vis the US dollar. The US dollar with two of the other major currencies basically caving to serious selling pressure and panic. The US dollar could take off seriously. That would put pressure on everything connected with the other side of the coin. When you talk about the dollar index, and you understand that precious metals are presenting the other side of the coin in this case. Okay, so that is the weekly. Let's go to the daily. So now it's the big unknown. We have here wave 1 or we have a C. We have wave 1, as I explained, it doesn't need to reach to this zone. Yes. And right now we worked with this being an ABC, fine. We had an ABC, fine, came down. There could be further decline, yes, to complete the price action here, or there could be slight complications, which is not something that is going to surprise me much. I'll show you what I have in mind. Sorry. We have this as ABC. That's an ABC that could serve as an X. And then you go down, you have an A, you have a B, you have a C. Okay, A, B, C, X, A, B, C, something like that. And if that's the end of the correction of the first leg up, it's obviously going to find its way to higher ground. 15.6 would be 15.6 would be a good level for us to feel more comfortable concerning the bullish development here. Okay, so as you can see, I mapped out for you critical zone right here. Okay, and most secured zone for the bulls is above 15.6. Right now it is, as you can see, midway. Okay, that's gold, and we have the bearish option, as you well know, defined here with the A, the B, which means that we have seen an ABCD complete, and in fact the situation here is quite mild as to what is actually likely to happen now, if gold indeed is destined to crash in that C. Okay, there is one more option that I don't favor at this point concerning the B, the bearish B, is that this is an A, B, C, D, but the E leg is not finished, meaning what we are seeing here, and I think what we are seeing is corrective, could be still part of the E leg. The E leg that would lead to the end of the B that would send it down as part of the C. I don't favor it so much, but perhaps this is something that we should also consider. The bullish alternative is taking this as an A. That's an A, that's a B, that's a C, that's a D, and we are in the E leg. The E leg could take 6 months, could take even longer. Look how long the B leg took, almost 1 year. Sorry. Took almost 1 year, and this one took easily 6 months. Yeah. So we're talking about months of drifting sideways to down concerning gold, and that should look perfectly normal in the wave count here, in the structure that we're using here, with this being an A, that's a B, and we're calling later on for that short C. Let's now jump to the daily. The price action here is definitely corrective. This appears to me an ABC. We didn't see 5 legs going down. The climb, or the attempt to climb, that really looks like a struggle, in fact, took the shape of, in my opinion, an ABCDE. Let me show you here. You see, that is clear ABC. I could be wrong, but I bet my money this is an ABC. And then look at the struggle going up. Look as to the many parallel areas that were traced here by Mr. Market. ABCD can do the job of classifying this as an A, and then we are coming down in what I think could be another ABC. We have seen a 1-2 smash down third wave that could form a fourth wave and give it another session of quiet sideways price action, and then and then another break towards 1280. That will form just the A leg, and expect further sideways price action, probably hovering around here, and then another break. I can't make out of the price action that we see right from the top, I can't make 5 waves going down, so that in a sense is really positive. Yeah, even if it drifts slower, and I hope that you understand my argument here, because you see, if you go down and you have a series of ABCX, ABC, all of this is corrective, which is a counter trend move. This is a counter trend move, which in essence tells us that the market is going to go the other way when the big trend comes, and the big trend is going to be up. If I'm reading it right, that's an ABCX, ABC, etc. Okay, there is another possibility that I don't favor at this point. I don't think it's very likely, but perhaps it's the right way of reading the price action, is to treat, in fact, the movement right on the bottom here as a 1-2. Okay, that's 1-2, and all of that as a 3. Whether the third started from here or from here is not going to make a huge difference. Okay, so imagine to yourself 1, 2, 3, and that's fourth wave. Okay, so that would in fact lead to something like that. Okay, if we see in the next several weeks that it's morphing into something like that, then the odds will increase that in fact is a fourth wave. It's waiting until we have a strong base going to shoot above this level. That could form the first wave of the C that we are talking about. But I tell you, I'm not very much keen on this option. I think that it is more likely to continue to drift lower, and the precious metals could definitely come under pressure given the possibility of an absolute surge taking place in the dollar index in the next few weeks.